What's going on, guys? So in today's video, we're going to be talking about something that you could possibly have thought about. And what does the real estate market look like in 2025? And is there a possibility for a real estate market correction or a crash? If that is something that interests you or real estate investing in general, hit that subscribe button, click the bell icon to get notified when I upload a new video just like this one. So let's get into today's video. Before we start making some predictions on the upcoming future, we need to understand what the market is like right now. So in today's market, there are some areas that are still booming, and there are some areas that have stagnated and some have actually decreased in value. So it's kind of a mixed bag out there, and honestly, that's kind of how real estate is. Some markets you're going to have great appreciation but low cash flow, and other places you're going to have high cash flow and low appreciation, and sometimes you can get both. But that's not what we're talking about today. We're talking about the real estate market as a whole. So one of the biggest influences in today's market is the interest rate, and that's how the Fed has tried to counteract the rising inflation, is by increasing the interest rate. Now, this has created sort of a pinch for home buyers, real estate investors, because raising the interest rates, the prices are still going up. Then that means that the home prices, or the mortgage rather, is going to be a lot higher than it otherwise would. So if you're an investor, that means the cash flow is going to be a lot smaller, or you're in the negative. Or if you're a home buyer, it makes it a lot harder to get into that home because that mortgage price is so high. So if the interest rates are going to continue getting higher or even just staying stagnant, then you can probably see the real estate market start to cool off a little bit, because not a lot of people can actually go out there and start buying homes. So you're going to start seeing a lot less demand on the market. However, and it has already kind of started happening, that they have talked about lowering interest rates, and they have by about a quarter or even half a percentage based off of whatever type of mortgage that you're getting. But like I said, if the interest rates stay stagnant, they stay how they are, or they increase a little bit, you can expect the housing market to dip, but that's not likely because we already been seeing some decreases in the interest rate. Another factor to consider is production going to be increased in 2025 with home builders? So back whenever COVID happened, blah, 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 the home builders stopped production because the inflation, all the increase in prices, all of that skyrocketed, right? So they slowed down their production because stuff started getting more and more expensive. So they're making less and less profit. What that means to the average person is there's a lot less homes on the market for people to buy. So the inventory has gotten a lot smaller, and the demand was exactly the same during that time. Now, with interest rates even higher than they are today, that means that the demand is starting to get lower and the inventory is still lower. So it's going to be interesting to see in 2025 if home builders start ramping up their production, because that's going to increase the supply, and that's going to potentially increase the demand, because interest rates, how they've been looking, is going to decrease. And what all of that means is the prices are going to go up. So again, it's going to be really interesting to see, because inventory is going to be going up. Interest rates potentially, more than likely, are going to continue to go down. So that's going to be something to look out for. Okay, now let's get into the core question is there going to be a housing market correction or a crash in 2025? We have to make a little bit of a distinction between a correction and a crash. Crash being the 2008 housing market crash. And that's going to be very, very unlikely, because that was a unique situation. The reason why it was unique is because there was risky mortgage practices, there were subprime mortgages, and a lot of adjustable rates that banks were giving out to people, aka their risky business. The reason why it's so unlikely to see something that's like what happened in 2008 is because lending practices has gotten a lot stricter, and it's a lot harder today than it was back then to get a loan for a home. And if you bought a home in today's market, you might be thinking like it's actually kind of easy to buy a home, like after you get it under contract, whatever. I'm not talking about finding the property. I'm talking about actually going through the buying process. That part is super easy. So you might be wondering how in the world was it easier back in 2008? Well, it was, so you can see how that could be very, very risky. With that being said, a real estate market correction could be possible, because if we start dumping inventory into the market, then housing prices could start to see a slight correction, so a slight decrease in value. But again, this is all kind of speculative, because if interest rates go down lower, it's going to increase the demand for the home buyer, and then that puts more home buyers into the market, which then could potentially increase because everyone's fighting for the properties. So it's going to be increasing the value of the property, et cetera, et cetera, et cetera. So it's going to be very interesting to see what happens in the beginning of 2025. Another factor that plays into it is having a geographical mindset. So what I mean by that is prices in New York are a lot higher than the prices in Oklahoma. So you could expect, and it's kind of more reasonable to assume, that the housing prices in New York would see a larger decrease in home prices, while home prices in Oklahoma could be going up. So it's all kind of geographically different in that sense. So is it going to crash or is it going to have a correction? Honestly, we're just going to have to wait and see, because there's so many unknown factors. Is home builders going to be pumping in inventory into the market? Are people going to be selling their properties because interest rates are coming down? So home prices kind of naturally are going to go up in price because people can afford the same mortgage, but the housing price is higher, but the interest rate is lower. You can kind of see the difference there. But if the Fed continues to decrease rates, it's all kind of in the air. We're going to have to see what's happened, but it's not going to crash. That's my prediction. It's not going to crash. Is there going to be a correction in the market? That's more likely than a crash. But one thing is for sure, that you need to be keeping up with the market. You need to be keeping up with real estate. So again, if you're interested in that, hit that subscribe button, click the bell icon to get notified when I upload a new YouTube video just like this one, so you are in tune with the real estate market and you can make great financial decisions. But until the next video, I'm out. See you.